While the panel sits down, let me just introduce myself. My name is Darcy Garner Batia. I'm a founding partner of Channel Family Assets, and I've been in this business for over 22 years, working with families and helping with values, investments, and alignment. We heard from Elizabeth and Lori today on the framework of how public money works, buckets from activists to, the least activists to the most activists, informing the actual social impact. And, what this group is going to talk about today is very similar, I find, suspiciously similar, because they did focus on social value, private sector, and all profitable, which I think is really great. And so this is the millennial, intergenerational, and we've got some great people from different areas. So we've got some impact investment manager type people as well as actual investors and funds. So, some of the challenges that the public sector faced, she talked about, was exits, liquidity, and I think that you'll hear that today throughout the conference with direct investments as well as probably some today in some of the private investing. Ticket size was also an issue. So this panel, I'm going to introduce Hillary to you today. She's going to be moderating the panel. Hillary's on my left here. Hillary Irby is that right? Is the managing director at Morgan Stanley. She's the managing director of Global Sustainable Finance Group, where she serves as the head of the Investing with Impact initiative. And she'll lead the investing panel on one of the things I thought was interesting that Lori just touched on at the end was how the supply and demand and who has to push this impact to the investors. Is it the investors pushing it or is it the other way around? And I think this panel is a good panel for discussing how that impact gets moved forward. So with that, Hillary, I'll leave it up to you.
Thank you. And thank you, Elizabeth and Lori, for that really interesting discussion leading us off. I think coming from a discussion on public sector capital, moving to one about intergenerational capital and investing is a really interesting one, as in both cases there's been a long history, but there's a lot of transformation happening. And as you may have guessed, I'm not the millennial on the panel. We have some, but we have some really interesting stories up here. And I'd like for each of us to introduce ourselves a little bit and tell you how we got to impact investing as part of our lives, because I think it'll help with the context and also show some of the tensions that many of us who are in this space are facing. Personally, I took the typical path from venture capital to an extremely large investment bank when pursuing impact, right? That's exactly what everybody thinks. But I was at a venture fund, we were doing a lot of digital media investing, and I was getting further and further away from things that really offered me intrinsic motivation. And as I thought about the ability to influence capital and where it was going, I thought, what better place to do that than Wall Street, one of the biggest places out there that is actually intermediating capital. And so I was lucky enough to find an opportunity at a time when Morgan Stanley was really doubling down on its commitment to environmental and social impact. And so I have the pleasure of leading Morgan Stanley's Investing with Impact initiative, which includes our wealth management platform where we offer products and solutions to clients, but also working with our investment management as well as our institutional securities group. And we'll just go down the line and give you a little bit of background on ourselves.
Great. So hi, everyone. I'm Justina Lai. I'm the Director of Impact Investing at Weatherby Asset Management. So I took a little bit of an opposite path as Hillary, although we ended up in similar roles. So I started my career in investment banking, like a lot of people, and then moved over to the buy side. So I was doing growth equity and leverage buyouts, completely non-impact. And I sort of looked at the partners ahead of me, and you make a choice. Do I want this career path? Do I want to be like these people? And nothing wrong with that, of course, but I didn't find it to be personally particularly meaningful. And so I found my way back to business school to figure out my life, and found my way to impact investing before it was actually called that, but was investing in agricultural enterprises in Rwanda with David Bonderman's money. And it was this light bulb aha moment for me where I realized that you can take private equity investment principles, apply it to something, a totally different context, totally different challenges, but really have meaningful impact. And that was the start of my career within impact investing. After business school, I joined the Rockefeller Foundation, where I had a dual role, co-managing a portfolio of global impact investments and also working as a program officer building the field of impact investing. And then I joined a firm called Sonin Capital, which is an impact investment management firm, before making the move over to the Weatherby, where my entire job is focused on integrating impact into client portfolios.
I'm Anna Marie Washer, CEO and founder of Flatworld Partners. We are an investment advisory firm that builds customized, sustainable investment portfolios for family offices and works with wealth management groups to offer underlying investment around sustainability for their clients. So I had a similar journey. I started my career off in investment banking in London as a consultant, and pretty much every project I got onto, I wanted to do microfinance in the investment bank, and I thought that was the coolest thing ever. So I'd read Banker to the Poor, and that really changed my framework of how banking can drive social change. Luckily, while I was doing investment banking consulting, we started a strategy within Accenture to develop SRI measurement tools and what SRI or ESG would return to shareholders on publicly traded companies. So I leapt onto that project, and after leaving investment banking and having enough of London, I started a nonprofit in Tanzania doing microfinance and women's development and providing free malaria medication. And that was a really nice switch to see the NGO process, and my view was, why can't we merge nonprofit and for-profit together? And so I put my little business school hat on and went off to business school, and when I was applying, they ask you, what do you want to be when you grow up? And so I wrote about Flatworld Partners and this idea for advisory and how can I drive more capital into impact, this really interesting opportunity where there were great investable opportunities starting to be created, and went off to business school and started advising someone on the G8 task force for impact investing, further establishing a tool that we use today called the external rate of return, which measures impact across asset classes. We partnered with the London School of Economics to build this. And I came back to New York, and I'd worked for a couple of family offices by this point on their investment team, and I wanted to start to build my own impact investing portfolio. And I had so many challenges around convincing my advisors to build this portfolio or to source and diligence the right kind of product, the right liquidity, the right risk terms I needed that aligned to my personal social mission. And other families that I was working with were having the same challenges. And I'm an investment banker, and I believe in capital. And so, building a strong investment team around me that could properly diligence the products that we were recommending to our clients was really important to me. I waited 7 years to launch Flatworld, and I only believe truly in the last 2 years have we seen a pivot point in impact investing, sustainable investing, in terms of the quality of products and the flexibility of those products to fit into clients' portfolios. And to me, that's the most exciting thing to see in this industry right now.
So I'm Eric Jacobson. Jill asked how we got here. I'm not quite sure how I got here, actually. Never thought a couple of years ago that I'd be at a high water women's conference, speaking on a millennial panel as a baby boomer male, but bring it on. So my background, I was a tech entrepreneur for the first half of my career, and I sold my company to what is now SAP. And I was trying to figure out what I wanted to do with myself. And I started a small private equity fund. And in the fund, this was in 2004, the idea was, could we invest in companies and or turn companies into businesses that had a higher purpose, getting people up off the couch and exercising, or relaxing and doing yoga so that they can enjoy life, or creating more time for moms for their kids. These are sort of some of the themes that we would talk about. And could we invest in businesses that were having those higher purposes and actually make more money by doing so. So I ran that fund for a while, and in 2013, I was complaining to my wife that this was really hard to figure out. I thought there was a really good idea in here. She said, this blending of nonprofit with for-profit, there's some ideal combination of those two things in my brain that I thought would be really cool. And I was complaining to my wife, and she said, go to Harvard and study it and figure it out. They'll teach you how to do it. So I applied for a fellowship, and I spent a year at Harvard, and they didn't teach me how to do it. But it was a great year studying what all of you and we now call impact investing, who's doing what, how, what are the interesting organizations, trying to find proof of success that you can actually generate higher returns as opposed to having to have concessionary returns. Tremendously fabulous year doing it. And so that's sort of what led me to going down this path of impact investing. I think I'm here representing myself and as an investor in my own family office, but also I started an organization called Gratitude Railroad, and it is just a community of investors who tend to be successful in their real lives, coming together saying, how do we use our assets to make a difference in the world? So really getting together and trying to say, how do we take action? How do we make real investments? How do we move the needle? How do we not just come together and talk about it? So that's what Gratitude is.
Great, thank you. So we've all heard all the statistics about millennials and who they are and the $30 trillion that are going to transfer from baby boomers and other generations to millennials in the coming 30 plus years. But what I think is really interesting, and for me at the root of what is the influence millennials are going to have on impact, is that if you look just at today or last year, we crossed the chasm, if you will, and now 1 in 3 in the American workforce are millennials. Greater than percentage than the baby boomers, right? And that's going to continue to grow. So these are the current employees, they are the investors managing money, and they are, if not already, as some of them are here, the future leaders of organizations. Some of them will be smaller entrepreneurial organizations, but they'll also be the leaders of mainstream companies. And so the influence is going to be, I think, quite wide. And one of the things I would love to hear, especially from some of our entrepreneurs on the panel, is how do you think that's going to change the nature of business and investment? And what we understand the millennials want to know everything about what they buy. They want to work for a company that they can feel good about. They want to invest in things that are aligned with their values, and they probably want to get out of any investments that don't, or that are kind of way outside of that realm. So how, if you don't mind, Anna Marie, maybe you can start, and how do you think that's going to shift?
Yeah, I mean, we have this conversation constantly with some of our potential clients on the wealth management side, or even doubters of impact investing, that you think that it's beholden because millennials are driving this shift into they want to do impact investing, and that's very true, but there's a hesitation because they're not actually the asset holders just yet. But markets turn quickly, and if you're not thinking about the next 5 years of your business and how you're going to build that business or even maintain that business, you're missing a huge opportunity. And impact investing is a huge driver in investment decision making. All the studies show it's 2 things. It's, well, 3. Transparency, technology, and impact investing is going to drive wealth management in the future. But there's more, and we actually talk about it from a return perspective. So if you're not an asset manager and you're not thinking about how you're evaluating even public equities on how these consumers are now purchasing that product, and millennials are starting to have children and how they're feeding their children or educating their children, those are the companies, to Eric's point, that are actually going to generate significantly higher returns over time. Those that are incorporating purpose into their product. how are you going to maintain a workforce and employees that work for you? It's by integrating kind of this purpose in your business model and engaging your younger generations of employees to take part in the conversation. And, you know, to your point, they're going to quickly move out of equities that do something bad in the world. And we saw this in Volkswagen and Wells Fargo and incidents like that. So there is there's now a third analysis that should be taking place in public markets. It's not just, you know, traditional volatility. It's this ESG risk that we talk about. And if you're not evaluating how a management team is thinking about those factors, then you're taking on risk that never existed before, because in the 80s, you know, if there was an oil spill, fine, you maybe lost a couple points on that stock, but it's much more scalable now. So it's not just driving the impact investing conversation, it's the performance conversation too.
And Eric, you've built companies early in your career, and you've helped build companies as an investor in them. Some of them more traditional industries, some of them very much focused around or adjacent to the impact space. As somebody who has built a really successful career in doing that, how do you think the shift in generational approach to both entrepreneurial activity as well as investment is going to be shaped by the demographics, right, that we're talking about all the time? And I think,
it's interesting thinking about millennials, and really, I guess what we and our firm think about is sort of the millennial attitudes and shifts. Listen, the millennial generation thinks differently. It's becoming a much bigger generation. They're gaining more and more, not just assets under management, but spending power. And the millennial generation thinks differently, shops differently, interacts with their brands and their products differently, cares about different things. And personally, I think it's really exciting. And as you know, building companies, for example, not only do we have to think about that in terms of the products and the offering and the marketing and how we go about it, but somebody mentioned employees. We employ people differently. It's a different relationship between employer and employee than when I was coming out of college. And the businesses that are thinking about it and thinking in that more compassionate, caring, purpose-driven, whatever terms you want to use, impactful ways, I think are hiring better talent, retaining better talent, have less turnover, have better product quality. It just sort of permeates everything in the businesses. I have long conversations. I'm a member of an organization called YPO, and you know, it's all people who tend to look and act like me. And we have long conversations. How do we get on board with it? How do we change our thinking in order to get on board? Because it's coming. And if you can plan ahead of it and invest ahead of it, I think you can do really well.
So, Justina, you play a really interesting role. You're at a wealth management firm with boutique by some standards, large by others, $4 billion in assets under advisement. And I should mention, women-owned and women-run. Impact has, people talk about this having become more mainstream in the last couple, 3, 4, depends on who you talk to, years. But it's something that you've been doing yourself for over 10 years, and something that Weatherby has been also doing for quite some time. What kind of intergenerational differences are you seeing in the approach to investment? How big of a part of the conversation is impact as well?
Yeah, absolutely. I think, as you've noted, you know, millennials, a lot of people are talking about this generational wealth transfer. But I'll say we're seeing it across the board. We're seeing it amongst baby boomers. We're seeing it amongst millennials, and we're seeing it amongst, you know, my generation, that tweener generation. And it is, you know, it's an opportunity, I think, for both generations to really see it as a way to engage and to learn together. So we're seeing a lot of interest across the board, and we're using it as an opportunity, frankly, to have a more holistic conversation. And so, as Eric and Anna Marie have both indicated, you know, it is sort of people thinking of themselves not only as investors, but also as employees, as members of their community, as philanthropists, as voters in this particular context. And so, you know, it is a fundamental shift in priorities and therefore something that's going to affect valuation and investment portfolios. So it is definitely something that we're seeing a lot of interest in, but I really appreciate Lori's comment earlier in that we are proactively bringing this to our clients as well. So we're certainly being responsive to clients, but it's our topic of the year, which means that it goes on every single client meeting agenda, whether or not they've expressed an interest in impact investing or even philanthropy. And our approach to it is really to say, look, it's our job to educate, and this is yet another topic and a really important topic to educate you on. And it's not we're not trying to force it on anyone, but we want people to understand trends in the industry and the way it might impact their investment portfolios.
Thanks. So, Anna Marie, you mentioned that you had external advisors who are helping manage your wealth. In this room, we have many asset managers, financial advisors, and others who are often struggling with how do I enter this conversation, or this has come up as part of the conversation, and how do I navigate that when oftentimes it can be a really complex conversation. There can be really differing views of within a family, or here we're talking mostly about families, so we'll leave it there. What would you have been looking for from your external advisors to give you the comfort that there was thought being put into some of the values that you hold in the investment context?
Right. I think a lot of advisors would be surprised at actually the little amount of effort it takes to have a client be happy about delving into impact investing. And to Justina's point, it's really just opening the conversation and the education piece. And for me, they weren't giving me any answers. And so I was bringing them product or ideas and just getting shut down. And that is a frustrating thing that really hasn't changed, and that's where impact investing lags. It's the majority of wealth management groups aren't actively having the conversation, and they may be producing education pieces, but then when you actually go to the advisor, there's no actionable product. And that's a challenge, I think, even in these conferences, is oftentimes we're talking about impact investing and we're not giving clear, actionable, you can invest in this. And it's maybe just 3 opportunities: a private product, a public equity portfolio, and a fixed income product that makes sense for you. And that's what's so pivotal about this moment in time, is that there are those products out there. For us in our firm, we have over 2,000 products in our database, and our clients are not alike on any level, in different ages and gender, in social interests, and being able to talk them through the flexibility of what that means. And even more importantly, to Summerlee's point, it is a big education piece. For us, impact investing is a smart investment strategy. It is not a niche. It offers better transparency in your portfolio. It offers a higher level of engagement. So especially for next gen and females that aren't quite comfortable with finance and making decisions or having that conversation with their financial advisor, it allows them to. And they're going to be engaged in a water portfolio because they care about water issues, and they may not care about a fixed income hedge fund, and they're not checking that product. And that's when, you feel a loss of control over your own money. And that was a huge driver for me, being fortunate to go into the finance and to understand different products and what fees meant and what liquidity and capital calls and all those things meant. But for a lot of people, it doesn't. And then you're taken by surprise, and then you're angry at your advisor. And so that impact investing conversation allows you to actually know about the next capital call and why, because maybe now they're investing in a company that's building green energy schools. And that's a great conversation. And, the other piece is educating financial advisors to be comfortable to have that conversation. And so we speak to advisors often and offer simple solutions and research, and just saying, okay, here's the first step. Here's what you already have on your platform. These are 3 mutual fund products that you can bring to them today. And if it's a larger client, let us help you offer more private, customized type products. So it's a partnership. It's not we're going to do impact and you're going to do your thing.
Right.
But I'll just share my, I don't know if this is helpful or not, but I'll share my sort of experience on it. I came out of Harvard in 2013 and decided I needed to be 100% invested in impact, whatever that meant, because I didn't even know at the time. And I went to my advisor and said, hey, I want to do this. And they first said, you're crazy. And then they said, well, why don't you take a little bit of money over here and we can explore it and we'll put it. And I kept saying, no, that's not what I want to do. And then they came to me and they said, well, here are these great ESG, SRI funds. And I said, well, my wife and I happen to care about empowering women. We want to invest in women. And they said, oh, here, look, here's these funds. If they have 2 women on the board of 26, then it's a great investment. And my reaction was, well, that's a bunch of BS. You know, that doesn't quite meet my definition of impact. And so they kept saying, what do you want? What do you want to me? And I kept saying, I don't know. I need you as my advisor to tell me how to do this and what this is all about. So for me, it was a very frustrating experience. I decided to leave them after 20 some odd years. They were great. They took good care of me. They had perfectly fine returns. They were wonderful in paying my whatever. They were great on all of those things, but they couldn't do it. And then I searched for investment advisors that knew how to do this. And even that's hard. I have to tell you, for me, even that was hard. I would run into firms that would say to me, oh, your assets you don't have enough assets. Maybe they were great, but I didn't have enough assets. Or maybe I'd go to firms and, they wanted to push product and I didn't really want their product. Or it's just a chaotic, crazy world out there. I don't know if that's what you're looking for, but it's hard. It's really hard. I'll tell you, it's really hard.
I'm taking him on the road with me.
I think most people would agree with you. So, Justina, I think that raises a really important point, actually, and Anna Marie, you touched on it too. There are a lot of themes and interests that investors who are interested in impact are thinking about. I always joke that for every 10 you talk to, they get 12 different things that they're, the ways they want to focus. So, how do you navigate that conversation? You're dealing with, trying to construct a portfolio that meets financial goals, but in order to be able to do that and really show that you're thinking about the values, you need to be able to navigate that conversation. So what do you do?
I mean, I hired a really smart team around me, and we stopped asking our clients, I'm sure Justina can add to this because she spends a ton of time speaking to clients about what they care about. We stopped asking them directly what they cared about. And we started asking them other questions. Like, if you were going to run in a marathon today, what nonprofit or cause would you run for? If you wanted to leave a legacy for your children, what would that be? Or what is a fear you have for your children in the future? And a lot of times, you actually get to a deeper conversation with your client and understand the things they care about versus an overwhelming, well, I care about everything. And, I care about women's rights and empowerment and water and environment and infrastructure and education. And so we started to do mission statements for every investment portfolio. And our portfolios are built over time. So it's not, hey, here's $1 million or $100 million. Today we're going to put it to work, because funds are raising at different times, and knowing and being in the market all the time, thinking about what's the next product that's coming to market, and this is the right fit for that client, that's where we add true value.
So I would agree with everything that Anna Marie said, but I would also add, a lot of our clients, so we have a handful of very pioneering clients that have been, some of these, 100% impact investors or pioneers that have come to this, 10 years ago. But we also have many clients that are part of this next wave of impact investors, and many don't really know exactly what they want to do. And many come to us based on what they're seeing in the news. So we have people say, this fossil fuel divestment thing, I really want to talk about that. Or I'm really concerned, how do I deal with Black Lives Matter? Or this Dakota Access Pipeline issue. I'm really concerned about indigenous rights. And that's an opportunity for us, again, to really educate our clients and really get to the core of what they're concerned about. And so we say, well, fossil fuel divestment, well, that's an opportunity to broaden the conversation of climate change writ large. There are many other ways to address climate change beyond just fossil fuel divestment. So that's one approach, but let's talk about all of these other approaches. You're concerned about Black Lives Matter or Indigenous people's rights. Well, that's about social and environmental justice. Let's talk about all the different ways in which we can address social and environmental justice. And so it's really about, well, what is the problem you're really trying to solve? Let's think about what the solution sets are for solving that problem. And then let's think about the right way to finance those solutions. And so that really is, and to Anna Marie's point, an opportunity to integrate that into a client's. We don't call it a mission statement. They're impact objectives, but those are things that we put into investment policy statements as well.
So I want to go back to Eric, Gratitude Railroad, and what you said that the organization has set out to do. I think that's really powerful. As we think about the impact investing space, several of our panelists have noted a growing opportunity set of products and solutions that are out there. But one of the things that many of us who are following the product set have struggled with is there's still gaps in the market. We see asset managers who are out there who are extremely interested in getting into this space, hear this demand for more products and solutions, but don't exactly know what that may mean or how to position it so that what they're developing is going to match the market demand. Is that part of what Gratitude Railroad is trying to do? Can you talk a little bit about that? Because I think the legacy of those who've had long, successful careers of investment, who've turned their eye to impact, there's so much value that can be derived from that.
Yeah, we do. We spend a lot of time talking about products, maybe not in the sort of investment advisor definition of products, but take Black Lives Matter as an example. We just had this conversation at our last gathering. If we want to invest in that as a theme because it's something we care about, how do we do that? I mean, and if you have an allocation in public equities, how on earth do you do that that's really meaningful and it matters if I want that to be a material allocation of my portfolio? It's easier in the sort of private directed investment world, but even that, it's not particularly easy. And so how do we as a group get together and think about things like that? We also had another conference. We had a fabulous presenter from a nonprofit organization called Inside Circle, and they go into prisons, Folsom Prison. If anybody wants to go, I can get you in. It's an extraordinary experience. And dealing with sort of issues of public prisons getting out, what are some of the challenges and issues there? This organization is a fabulous nonprofit organization, but we'll sit around and say, hey, how do we turn that into a scalable for-profit business so that that poor guy isn't spending his life trying to get $25,000, $50,000 grants from nonprofit philanthropic organizations? How do we build a real revenue investable for-profit model for an organization like that we can scale and grow and have material impact? Those are the kind of products and challenges we like to sit around and try to figure out.
It's great. I mean, we hear lots of clients who are trying to wrestle with those, or they'll come with a public market portfolio and ask their advisor, how can I deal with this problem? So to me, one of the things that's we talked, Elizabeth and Lori talked about what's they want to see or they expect to see in 10 years. And I think one of the things that is most exciting and what I hope we will see in 10 years is more and more people applying their deep skills to these issues and making them more accessible for the wide range of investors. I know we want to open this up to questions. Do we have one already over here, or are they just, okay. Questions?
Hi, I'm Paul DeLeo from Grassroots Capital, and we've raised and managed a number of funds over the last 15 years, all private. And Elizabeth mentioned this disconnect between the retail interest and the financial advisors or intermediaries being something of an obstacle. And then you've all shared your horrendous experiences trying to find an advisor who could actually enable you to do what you want to do. And I'm wondering, and we've experienced the same thing, had these dialogues of the deaf with financial advisors when their clients have been looking for something. And I wonder what you think are maybe the structure. I mean, this isn't just coincidence, and these aren't, stupid or stubborn people. what do you think are sort of the structural issues that are behind this disconnect, whether it's the way these advisors are evaluated and compensated, or whether it's the nature of the deal flow, that it's too small or sporadic, or, some of you have mentioned some of these deals are just too small and they can't be accommodated by the infrastructure of the advisors. How do we sort of deal with what I think are some of these structural issues that are making it so hard for these advisors to actually deliver what their clients are asking and what the originators of these assets are offering?
I can give just an example of one of the challenges that we face. So we started with a fundamental. My partner is really into climate change and solving climate change, and he's become a big fan of a gentleman by the name of Alan Savory, who believes that if you intensively rotationally grazed all the cows on the planet, it would sequester carbon and make a material impact on global warming. So we created a land fund to invest in farmland to try to prove this theory, to see if we can create a profitable business model to get people to intensively rotationally graze their cows. All that doesn't matter, but we're trying to raise that fund, and the problem is it's a new fund, so the big real money, institutional money on Wall Street, it's hard to get them to invest. I get it. It's a new fund manager. It's a new concept. Hasn't been in business for 3 years. It's a $50 million fund. They want to write a $50 million check. So there's just a structural problem of getting real money. But to raise $50 million from impact investors, when if you have, say, a $10 million portfolio, which is a very nice portfolio in my opinion, and you get to your private equity allocation and the diversified down into whatever, you might get $100,000 or $250,000. And so to put together a $50 million fund to prove the concept is exceedingly difficult. And there's just a gap. That's just one of the many problems, but there's just a gap as we're trying to go out and sort of tackle some of these real social problems and put together a fund or an investable model behind it. It's going to take us time to get to scale. It's going to take us time to prove it, and it takes a lot of slogging, and hopefully we'll get there in a couple of circumstances, but it's a real challenge.
And I'll say, so absolutely there's sort of a product gap challenge. There are some fund-to-funds out there. We heard from Vivina earlier from Sirona, but not a recommendation or anything. There's still a long way to go, and obviously there needs to be multitudes of Sironas out there, right, for this to work over time. But I would also say, I think scalability is a concern and a question for a lot of advisors. So this is a highly customized approach. I feel really fortunate to be at a firm that builds custom portfolios anyway. We don't have any of our own product, my partners here might kill me, but we also aren't focused solely on profitability. Of course, that's important, but first and foremost, we're focused on serving our clients, which means we build custom portfolios, which means that I spend a lot of time with clients and just figure out what they want in terms of impact and find a solution for them, period. And, that the hope is obviously that leads to profitability and client retention and referrals and those sorts of things. But I think a lot of other firms are structured in a way in which it really is about the bottom line, unfortunately. They don't have that kind of flexibility. We do because we're employee-owned.
But it's a challenge of scale for you too, right? You have to spend way more time with each invested dollar because you're layering over this third layer, and the dollars today are much smaller. I don't know what the real impact dollars are, but I think it's a rounding error of the overall dollars. And so to have you guys figure out a profitable model is a challenge. And as an investor, you want low fees. So you try to jam the fees down when you're actually providing a higher value-added service, and how do you reconcile that?
Well, I think, and that's a great question. I think we wouldn't have been able to do this if we didn't already have a large enough asset base to do it. So, that is the benefit of being at a larger firm with existing resources. I joined the firm a little over a year ago, and before I joined the firm, I said, well, by bringing me in, you're immediately a cost center. And they said, we don't look at it that way. This is the way the world is moving. And if you aren't paying attention to this, if firms aren't doing this, everybody should be thinking about this for their business. This is a value-add service offering to clients, period. And this is the way investing is going to move. So if you ignore it, you're already falling behind.
Yeah.
I think there are also challenges of definitions. So I now use the word impact investing. I used to not. But it seems to be the term that people use. But, what's impact to me and what's impact to each person on the stage is completely different. I've sat and listened to two brilliant women who both care immensely about empowering women debate how to go about doing it and what's the right way to do it, and they both have merit. And anyway, there's a lot of confusion about definition. A friend of mine started NIA Global Solutions, and it's a great fund, but I debate her all the time about whether it's really impactful or not, right? Anyway.
And I think all of that means that there needs to be more education. It's a difficult set of conversations to navigate because no two are the same, and takes a lot of process and individual customization in order to adapt. So I think that is a big piece of the equation. But let's move on to the next question.
Sure. My name is Camilo Mendez from ProMujer. We're an NGO that serves low-income women in Latin America with financial services, primary healthcare services, and educational services. My question is really about what are the constraints to private investment allocations in the impact space. And it strikes me that liquidity has to be in the paramount in that constraint. And what can be done to help address this? Is there an opportunity to create a secondary market within asset managers to help address that? We're probably at the size that we're far away from being able to go public on our own. So anyway.
Without making any product recommendations, Anna Marie or Justina, either of you want to take that?
So we do a lot in private markets on behalf of our clients, and the secondary market is something that's really important to us, and so allowing families to have a very natural conversation with each other when they are investing in similar opportunities, or someone wants to take on a later round of investing, we can introduce those families or recommend moving those investments across the portfolios very naturally without taking fees. And so over time, we really do want to engage in a broader conversation with other organizations that are making those investments and create better liquidity terms. We always challenge entrepreneurs to rethink their business model. And so especially in early stages where you're looking for equity, but you do have a consistent cash flow coming in because you're loaning small amounts of money to your women, is it possible to create a dividend payment system to those investors coming in? Before on the previous panel, they talked about holding companies versus funds. That's something that certain groups, without making investment recommendations, are doing, that are offering better liquidity preferences. And our job, and Justina's as well, as an advisor, is finding products that fit throughout their portfolio and funds that offer better liquidity terms. There are capacity restraints. You're not going to get institutional money into early stage deals, and so it's finding the right investors, and that is a challenge, and we deal with it every day.
I guess I would just say, there are opportunities for people to start working on this issue, but we're not there yet. It's not happening at scale. There are folks that do buy secondary interests in the marketplace, Sorona included, and there are foundations working on this issue. So I know, that the MacArthur Foundation has been thinking about liquidity vehicles. I think Case and F.P. Heron have also been thinking about that. Fran Siegel I saw earlier from Ford Foundation. So there's a lot of folks that, that work on sort of the enabling environment for impact investing that recognize this issue and this challenge. And I don't think we've figured it out quite yet, to be honest.
Questions? No? All right. We are good on time.
Sorry. Thanks for this great panel. For the public market folks, I'm a financial advisor, and I'm trying to put impact portfolios together for clients. The fiduciary rule is keeping us really busy right now because of the transition that we're in. But it seems to me that part of our fiduciary responsibility as advisors is, if there's data available now on ESG and the correlation between better returns and lower risk, that it's part of our duty to bring that into the conversation. Just curious if you think that could help be a driver of bringing this a little bit more into the mainstream.
Absolutely. I mean, we integrate impact investments across our portfolios, and across asset classes. So that absolutely includes public markets, ESG integration, both from a risk mitigation as well as a value enhancement standpoint. And I should just also mention, too, that you can have impact beyond your capital. So we work on shareholder engagement activities as well. So, once you invest, you're not done. There's an impact portfolio management component of your work as well.
Yeah, I think proxy voting is a great example of being an active impact manager on public markets. We're working with a new startup that drives proxy voting through technology, so you swipe left, swipe right on issues you care about. There are a ton of studies that show that ESG have outperformed. A notable one comes out of Harvard, that shows that a dollar invested in traditional returned, I think, $14 over 10 years, whereas in the ESG portfolio returned 28. I mean, we're preaching to the choir by sitting in this room and throwing those stats out. It doesn't matter how often I share these stats with, older generations that may not be the biggest buy-ins of impact investing, they'll still challenge it. So, my recommendation to the managers out there is build better product and deliver us great returns, and we can keep publishing those reports until everyone's buying in, and it's not impact investing, it's good investing.